Good morning, guys. Just going to do a quick little trade review on Euro Pound. Been getting a lot of emails regarding Euro Pound. For some reason, it's been a pair that's seen a lot of speculation, and more so, people have been looking at it as short side. So, I just want to go over why I've been more bullish on this pair and why I've been trading on the long side, and just to help you guys a little bit in your biases. Okay, because people get confused a lot. I've been seeing all over social media people talking about Euro Pound short, Euro Pound's going down, Euro Pound's gonna fall, right? And then people forwarding me stuff on email. Some people are members in some other forex communities. A lot of members have been told short Euro Pound. Just keep adding to it short. And I just want to take a step back a little bit, right? I want to explain something which is really important, which is the concept of not having a bias in your trading. Okay, don't have a bias in your trading. That's it. Let the market tell you where it's want to go. Because I've been seeing, even on my Facebook, I have a lot of people added on my Facebook. I don't really filter who I'm adding. I just add everybody. And I've been looking at people's posts, and it's all been about Euro Pound short, how it's going to go down. And I just want to help you guys a little bit with the bias, okay? So, here's what I've been seeing. Here are the reasons people have been giving for shorting Euro Pound. Okay, number one, the reason people were giving was the fact that if I just take this thing out here, hold on, right here. All right, so number one, people have been saying that, oh, it's going to be a head and shoulders pattern, right? I'm going to draw that for you so we can kind of see what those guys are looking at. So, number one thing people say, this is going to be a head and shoulders pattern. So, that's why they want to short it. And, that's fine. That's fine. You saying this is going to be head and shoulders is perfectly fine. But here's the thing, right? And this is something really important that I don't know if, people understood or not. But here's the thing. Head and shoulders pattern are patterns that you want to short on a break of the neckline, okay? On a break of the neckline, but not as it's just going up, right? Don't try and pick a top in the right shoulder, okay? Because right now it's going up. You're getting in front of a moving train. No good. So here's one thing. And another thing I want to tell you is these patterns, okay? And another thing I want to say is that head and shoulders pattern are much more reliable and much more potent when the neckline is flat, okay? When the neckline is flat. Now let's just take, we've got a flat line here, all right? I'm gonna move this line. Is it flat? No, right? It's not flat. So what does it tell you? It tells you that it is not a head and shoulders, and it's not gonna be a head and shoulders, right? That's what it tells us, because what's happening right now, the stock is not the stock, but the currency pair is uptrending, okay? It's uptrending. That's it. And if we can take this little, thing right here, all right. And I want to also show you another reason people were kind of bearish on this pair. And let's add some oscillators on here, because some people were adding the MACD to this and saying, well, look at this. This is going to be a head and shoulders. You also got a MACD divergence. So this is going to go down. But here's another thing I want to kind of cover. And this is a concept that a lot of people seem to mess up, okay? MACD divergences, RSI divergences, they're all good concepts. They're all good concepts. They all work. But they are confluence adding indicators, okay? What do I mean by that? I mean by that is the market structure still has to be in alignment. So the market structure has to be in your favor. The trend, the pattern has to be in favor. And then you can use the MACD as an additional confluence to give you the confidence that the trade's going to work. Okay? It's just a confluence adding indicator, but it's not an indicator to use on its own. You don't just say, oh, MACD divergence, I'm going to go short. No. First, you need price action in your favor. You need the market structure in your favor. And then you can use MACD to add confluence to your trade, but don't use it on your own. Okay? And don't try and predict head and shoulders. Let it play out. And also, head and shoulders work more on a flat neckline. Let me actually show you an example of what a good head and shoulders might look like. Okay, so this is the Euro-Norwegian dollar. Okay, krona, Euro-Norwegian krona. So this is what a good Head and Shoulders look like, right? You got your little left shoulder right here. Okay, we got our head right in here. All right, and then we got our left shoulder right here, and look at that, we've got a flat neckline. That's it. And see how this pair is not been able to go up. Now it might go up, it might fail because there's still support around this area, but this currency pair has not been going up like euro pound because it's a flatter neckline. That means the currency pair is flat. Okay, whereas the euro pound, I don't know why people have been looking at it short. I've been long all through. I got out this morning, I just woke up right now, and I just saw it hit my target, which is awesome. But I just want to give you my reasons. I don't want to brag about my trade. I want to show you the reasons why I have been more bullish than bearish, and it's simply that I don't have a bias in the currency pairs that I trade. I let the market tell me what it's going to do. Right now, how did I know it's kind of going up? Number one, we're in an uptrend. Number one, right? Look what's happened before. We've had, all right, a bullish move. Bullish move. All this is really just a bullish consolidation to take us higher. Okay, and let me just delete that as well. And I want to show you few things. So now, number one, we see a bullish move. We see a bullish consolidation. Okay, and that's what's been going on. Number two, since we're already in an uptrend, we can pretty much take this uptrend line, all right, and move it up here. So now what does this give us? It actually gives us a upward sloping channel. Okay, so why would you want to short it? That's all I ask. It's got a bullish move. It's got a bullish consolidation to go higher. It's in an uptrend, right? It's in an uptrending channel. So if you want to short these patterns, they make for good shorts later on. They do. But you want to wait till these patterns break. Let it break the uptrend before you try and short it. Or let it at least touch the top of this channel line to short it back down. But when you short it here in the middle, you're just getting in front of a moving train which is going up, right? So short it either at the trend line or let it break. And another reason people say is, well, you know, it's into kind of this. If I go to the monthly chart here, all right, let's go to the weekly. In fact, so another reason people give me to short this is, well, look at this. It's moving up. You know, it's moving up into all of this resistance. So that's why I want to, you know, short. That's another reason that I saw on social media. It's into this resistance. Well, number one, it's not into it yet. It will be as it goes up. It'll come into this resistance, but it's not into resistance just yet. Number one. Okay. And number two, you got to understand market maker moves. All right. So the fact that it's near this little resistance pivot, okay, the fact that it's so near this resistance pivot, what happens is that market makers, there's a lot of incentive for the market makers to just peak above, right? Just kind of take out this little high. Just take out this little high, right? There's a lot of incentive for market makers because they know anybody who's short this currency pair is going to have their stop losses above here, right? Or they're going to have their stop losses above here, or they're going to have their stop losses above here. Yeah. So it's, you know, the market's never going to pull back and go straight down without taking one or two of these highs out. Take out their stop losses, and then the market might be ready to go down, right? That's why you don't want to short into these levels. You want to wait till these levels break, and then you might want to short it. Okay. And another you know, thing I want to mention about market structure, which is another concept that people fail to grasp, but it's the easiest concept ever. Okay. So when the market's going up, what does it do? It makes higher highs and higher lows. When the market's going down, what does it do? Lower highs, lower lows. And you might be thinking, shit, Armo, I know this. This is a basic concept. But do you? Because you know, especially if you're one of those people who've been told to short your pound, you know, just here's the thing. We got a higher low. We got a higher high. We got a higher low right here. All right, and then we got a higher high. And, you know, just these things repeat again. We got a higher low. So what's going to happen? I mean, just logically, we're probably going to get a higher high. So this is the market structure. This is not me. This is not my bias. This is the market going zigzag, right? That's what's really going on. Market's making higher lows, higher highs, right? Higher lows, higher highs. So when it came down to this trend line, right, got this little bottoming tail candle, started to bounce. This is where I took my long position, right over here. It got above this line. I got in long, and I just put my stop loss right here. I put my target right there, and boom, this morning I woke up, target hit. So here's also another thing I want you to notice. Look how much I was risking. This was my risk on the trade, right? And then look at the reward on the trade. That's what I want you to notice. So again, this is not me finding a buy. I'm just looking at the market making higher highs and higher lows. So if I go long here, I'm expecting it to make a higher high. And that's the market structure. So, you know, just to help you guys a little bit understand the market structure, because it's really important. You don't let the market say, oh, it's going to be a head and shoulder. Let it be a head and shoulders and then short it. Let it break the trend line and then short it. Let it at least run into the prior pivot or the, you know, the uptrend line before shorting it. But meanwhile, why don't you just go long and make some money, right? And let me actually show you, I guess, my executions on this trade so you guys can kind of see it visually on the chart. I'm going to put it on an hourly chart, and let me go ahead and delete these, you know, I guess, lines I have drawn in here for a little bit. Kind of just delete these lines here. All right, so even last night I was kind of considering, you know, exiting it, but I saw, well, still making, you know, higher highs and higher lows, so let's just be in. And let me show you kind of the execution on the chart so you can see where I entered and you know, where I exited. Right here, euro pound. There you go. Look at that trade. Got in long right as this kind of downtrend was breaking. Boom, boom, we're out there, right? Look at that. How many pips is that? Let's take a look. 210 pips. 210 pips. Nice trade. And again, I still wouldn't just go short right now because it's going to seek for liquidity. It's going to try and take out these highs right here and take out the highs perhaps on this weekly, take out the stop loss, and then it might be ready to go down. But just hold on, because also another thing I want you to kind of notice here is right now what's happening here. It's still in an upward sloping channel on an hourly chart. So if you do want to short it, at least let this break, right? At least let this channel break, and then you can try and, you know, short it back down. But let it break. Let it break. Don't get in front of a moving train, okay? So that's that. What else we got going on? I think we got another good trade going on the AUD CAD. Let me quickly show you that one as well. So this is another trade we have open right now. Looking good. Similar situation. It's heading up into our target. So again, similar trade. We kind of just, you know, it's been an uptrend. It pulled back. Where did it pull back to? Pull back to support. Right, formed this little base, broke above that base, we got in long, we put our initial stop loss right here. As it moved in my favor, I brought my stop loss right here, and I'm looking to see if we can you know, push into, take out these little highs, you know, stop everybody out, and then that would be my target. And you know, this trade is also looking really great. So that's that. Come check us out at livetraders.com. We do also have, you know, we provide all these signals before I get in myself. These all sent through text messages and private Twitter channel. You know, as soon as this trade is called, and there's, you know, plenty of time for anybody kind of putting the trade on as well. We give the entry, we give the stop loss, give real-time updates on management. And I also have Trade Copier, got a bunch of investors in there, and all that good stuff. So come check us out. And one thing I just want to take away from the videos, here's what I want you guys to do on your homework. Go out to your charts and just look at what's happening. Don't look at indicators. Do you guys see any indicators on my chart? No, not a single indicator. Okay, so all I want you guys to do is ask yourself the question, step back for a little bit and ask, what is this currency pair doing? Right? That's all you need to ask yourself. Same thing here. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher lows, right? And you're going to expect a higher high. Even though this trend line right here broke. Yeah? Even though the trend line right here broke. Did the trend break? The trend never broke, right? Because the trend is higher lows, higher highs, right? Higher lows and higher highs. So the trend actually never broke. Even though the trend line broke, the trend never broken. It's always been making higher lows and kind of higher highs all the way through. So the trend is still valid, and that's why I would expect this to kind of head up there. And trading can be simple if you make it to be. Trading will be as simple as you make it to be, and it'll be as complex as you make it to be. There's no fancy analysis. I just ask myself the question, what is the currency pair doing? That's all. Higher high, higher low. I mean, that's it. So it can be as simple as you want to make it to be. It can be as difficult as you want to make it to be. But anyways, that's that. Hopefully you guys learned something out of here, and I'll talk to you guys later.